Well, hello out in Facebook Live land or wherever you might be watching this. I know we get it posted on our website, we get it posted on YouTube, kind of all the places. So hold on, got a little bit of some technical difficulty. Wait for me here. Okay. All right, so we should be good, hopefully. It's always an interesting process with Facebook and there are many changes. But wherever you may be watching this on the different platforms that we posted, it always originates as a Facebook Live. It's not always easy for people to tune in midday, so we get it out there, like I said, on YouTube. We get it to our website and other various places to make sure that you have access to watch it based on your schedule. So this is our October This Month in Housing episode. Dustin's going to be joining us to talk about what the interest rates are doing, talk a little about inflation and some thoughts on what might be upcoming with that. Of course, everybody wants to know about rates, so we'll definitely be talking that. But for now, I'm going to go through and talk to you about what's been happening in our local real estate market over the last 30 days, what happened in September, how did the first 3 quarters of this year end up as compared to 2021, and where do we stand, what are things looking like? So as always, we're going to start with our closed sales and all of those details for Muscogee and Harris County in September. So we'll talk September 1st, and then I will talk about what the first 3 quarters have looked like. So September, there were 232 closed sales. In 2021, there were 318 closed sales, which is about 86 more than this past September. And in 2020, there were 362 closed sales, which was about 130 more. So one thing I want to tell you is if you go back to the previous months and kind of what the market update has been, month over month, looking from this year to 2020, what you will see is through the majority of that year, 2020 was really tough until we hit September. As things started to open back up in 2020 and the real estate market started to kick in, we started to make up ground for time lost through the shutdown and kind of through the summer when things were so much more touch and go at that time. So the fact that September 2020 was really a strong September as compared to this past September does not surprise me for that one fact alone. So anyhow, I thought that was very interesting information. Right now, let's see, I am going to go to average time on the market. I just realized I forgot to get some details on this that I'm going to get for you while Dustin gives interest rates, but I'm going to continue with this part for now. Days on the market, September 2022, 27 days average. 2021, it was 29-day average, and 2020, it was an average of 49 days. Average sale price for September 2022 was $257,000. In 2021, it was approximately $235,000, and in 2020, it was $228,000. List price to sale price percent, which means what did it list for versus what it closed out for. So list to sale price percent in 2022 for September was 98.26. In 2021, it was 99.03, and in 2020, it was 98.5. So we had a little bit of a spike, meaning we had less negotiations happening in September of 2021, and we've gotten back to a little more negotiations that are happening right now. Again, I mentioned this last month, that list price to sale price percent, it does not take into account if there was a price reduction. And the truth of the matter is we are definitely seeing more price reductions in this market now than we have seen in a very, very long time. Again, not surprising as the market has shifted, as interest rates have gone up with rising inflation, all of those things, it would be normal that we would expect that. So nothing that is a big shock with any of that. Let's talk year to date for Muscogee and Harris County, looking at January 1 through September 30th, those first 3 quarters of the year, how did everything close out in comparison to 2021 and 2020? So total closed sales for the first 3 quarters of this year is approximately 2,595. In 2021, the first 3 quarters, it was 2,879, which was about 284 more homes, and that is a pretty significant number year over year. And in 2020, the total to date was 24,720, which was about 123 less than this year. So last year was definitely a spike year. This year, still a good year, but not as good as last year. Days on market, the average for the first 3 quarters of this year is about 28 days. Last year, 2021, for the same time period, it was about 33 days. And 2020, it was about 65 days. So significantly less than 2020, but again, we've talked about that a lot. Much of that has to do with what was going on with COVID and quarantine and all of that at the time. So average sale price for the first 3 quarters of this year is about $256,000. For last year, the first 3 quarters, it was about $31,000, excuse me. So let me say that again. This year, it is $256,000. Last year, it was $231,000. And 2020, it was about $205,000. So again, we're definitely still ahead of what 2020 was. List to sale price percent for the first 3 quarters of this year is 99.07, which is still strong. 2021, it was 99.53, and 2020, it was 97.74. Now, normally I would tell you how many active and pending listings there are, and I forgot to pull that this morning. So I will circle back to that after Dustin, and I'll let you know that for both Muscogee and Harris County, as well as Russell and Lee County. But for now, we'll move on to the stats for Russell and Lee County and how everything ended up for September of this year, and then we'll look at first 3 quarters as well. So in Russell and Lee County, closed sales for this past September were 120. For 2021, it was 163, which is about 43 more closed sales. And in 2020, it was 153, which was about 33 more closed sales. So we're definitely down on closed sales for September over the last couple of years. It's a lower number than what we've seen recently. Nothing alarming, nothing that is surprising, but just, nature of the market at the time. Days on market for this past September was about 24 days. In 2021, it was about 23 days, so still holding about the same there. And in 2020, average days on market for September was about 60 days. Average sales price for this past September was $255,000. For 2021, it was $226,700, and for 2020, it was $217,000. List to sale price percent. 2022 September, 99.25, still very strong, not huge negotiations, down just slightly from September of 2021, which was 100.08%, and then 2020 was 98.74. So looking at what the year-to-date is as compared to the last 2 years, for Russell and Lee County, closed sales, 1,324. In 2021, for the first 3 quarters, it was about 1,357, so about 33 homes more last year to this year. And in 2020, it was 1,189, which was about 135 less homes. Average time on the market for the first 3 quarters of this year is about 23 days. For last year, the first 3 quarters, it was about 30 days, and for 2020, it was about 67 days. Average sale price for first 3 quarters of 2022, $249,000. For 2021, it's about $219,300, and for 2020, it's $197,000. List to sale price percent still looking strong for the first 3 quarters of the year in Russell and Lee County. It was at 100.06 so far for this year. We may see that bump down in these last 3 quarters of the year, so it'll be interesting to see when we do our year-end numbers where that actually ends up overall for the year. Last year, for the first 3 quarters of the year, the list to sale price percent was 99.87, and in 2020 it was 98.72. So it's actually been a little bit higher this year over the last 2 years in Russell and Lee County, which is not quite the same for Muscogee and Harris County. So that gets us our market number update. Nothing that is super crazy or surprising with any of it. Again, having a great year. We are seeing some slightly lower sales. When you look at number of homes that have sold, we're 43 less in Russell and Lee County so far this year, and about, what did we have? Excuse me, that's not correct. Let me say that again. Yeah, 33 less. And in Muscogee and Harris County, a little more significant at about 284 less homes. So, that adds up over time, and that definitely shows a shift in market. But again, none of that's surprising. We fully expected to be seeing those kind of numbers right now. We're going to bring Dustin in and talk some interest rates, and I'm going to pull some quick stats so when he finishes up, I'll be able to tell you how many active and pending listings there are right now in both Muscogee and Harris County, as well as Russell and Lee County. But for now, you've got the floor, Dustin.
All right. Well, so I'm sure y'all are dying to hear where the rates are. So, this has been, since we last met, it's been a volatile year as a whole. But it has been a pretty volatile 6 months. We did have a Fed rate hike last month. It was 75 basis points, and then there's always most people correlate that. I know we have mentioned that in the past, that the Fed rate hikes do not directly impact mortgage rates, but it's more the message that the Fed sends when they deliver these rate hikes. And are they delivering a calming message, or is it a panic?
Some of the calls and questions I got didn't seem calm this week.
No, it's not calm. So it was not calm. So the last message they gave was, I believe that was not this past Friday, but the Friday before, was going into a weekend. So we don't get any kind of interest rate data through the weekend. We didn't get that again until Monday. So the message they put out the preceding Friday really threw us for some loops. So it was definitely,
as it did a lot of other people.
Yeah, it was an interesting Monday, but we have seen a lot of volatility. We have kind of righted the ship since then, though, and things are getting a little bit more back to normal. No, rates are not back in the threes, but they are at least at a point where we can conduct normal business. It was a pretty crazy Monday and Tuesday last week. So, but I do think.
Look, I'm just gonna say, Dustin was texting me on Monday, telling me, "Ooh, I'm gonna have a lot to talk about."
Yeah, I was asking for a job. Yeah, I was thinking I might need a job down here. But yeah, so Monday and Tuesday were crazy days. But Wednesday was a good day, and ultimately the week as a whole ended up being a wash rather than a negative, I would say, last week. So rates are still pretty volatile, so I would keep an eye on that. But something that I mentioned to Kim a few minutes ago, and it's a pretty good indicator. I know we have mentioned in the past that anytime we've been in a recession, rates tend to be lower. And so I'm going to post a chart down in the comment section. I tried a minute ago, but I couldn't get Facebook to cooperate with me. So really simple.
Welcome to the club these days.
Right.
Oh my gosh.
Really simple though is you will see 2 lines on there. One is a red line, one is a blue line. The red line just shows current housing inventory. I don't think that has a great correlation to anything, but it is interesting to see it in comparison to the other pieces of the chart. But the blue line is going to compare the 10-year Treasury to the 2-year Treasury. And in short, what that means is right now we have something that people call an inverted yield curve, and that just means that the 2-year has a better return than the 10. So if you were to give the government $10,000 right now, there would be a better interest rate or better return in 2 years than there would be in 10. And that's not the norm. So the chart that we have that I'm going to post below, the blue line displays that in comparison to each other. So anytime you see that blue line drop below the constant black line, it means the 2-year is better than the 10. And also on that chart, you're going to see some vertical gray bars, which are recessions. And so right now, Our blue line is below that black line. We do not yet have a gray bar for a recession, but the chart goes back to 1970, and after you take a quick look at it, you're going to see, okay, we probably are going to have a gray bar here pretty soon. And that's just to show that we've been here before, you know, and we will have brighter days. So I do think we're close to seeing some lower interest rates. Now that might be 12 months, it might be 24 months. We just don't know, but I do think they're on the horizon. And there's also some inflation data that we're really interested to see that comes out in the middle of September, in the middle of November, that may kind of show some signs of maybe starting to get this thing under control. So.
And we're going to bring that information to you guys as soon as we've got it. So we may end up doing 2 Facebook Lives in November to kind of talk about what Dustin is saying with hopefully maybe some good information. We'll see.
I hope so. I think we're trending that way. I mean, everything looks like we are, and obviously things can change at the drop of a hat. But I mean, my glass half full, and I'm pretty pessimistic. So I think we're going in the right direction. I think it may take some time, but we are going in the right direction. There's some key things that look like they're kind of getting to where we need them to get. So we'll see where it goes. But I still think it's a great time to buy a house. I do not think this is a bad time to buy. And I think a correlation a lot of people don't take into effect or take into consideration is when rates fall, home values rise.
Yeah.
So do I think we're going to see 3% overnight? No, I do not. Do I think there being a time in the next 24, 36 months, 12 months, whenever, do I think we could possibly see something in the low 5s again? Maybe high 4s. I think that's realistic. That was a realistic interest rate prior to COVID. So I think we can get back there, but I don't think we may never see 3% again, 2.75.
Yeah.
So if you're waiting for those, I would not wait. I think the risk of not buying the home you love to maybe get a little bit lower interest rate later on down the road is probably not worth it. I would shoot for the refi more so than I would banking on those rates to fall, in the next 6 months.
That makes sense. It totally makes sense.
So, yeah.
Well, and if you look at like what inventory is doing, so we'll segue into this conversation now that I have the numbers on active and pending listings. Sorry, I did not have all my ducks in a row this morning. Right now, Muscogee and Harris County, there are about 405 active listings and 347 pending listings. So if you've been out there following us for the last 3 years that I've been doing these market updates and talking about active and pending listings and all of that, you will see that we are definitely at a point where this time last year and all through last year, there were a lot less active listings than there were pendings. Pendings were really high, actives, we had very few things on the market. We have now crested that. There are now more active listings than pending sales. So that's a shift in market. That's just, and it changes things in home values. If you look, so average sales price for September in Muscogee and Harris County was $257,300. And last year in September, it was $235,700. So over the last year, we have seen, despite the rate increases and all of that, we've still seen home prices increase. What I think we'll see that's going to be different, and that is already different in our market, is we aren't going to see the highly inflated purchase pricing anymore. People are still going to be paying a fair market value for homes. So I'm not really concerned right now with, oh my gosh, bottom's about to fall out and all the values are going to plummet. That's not really what we're going to see. But what we are not going to see as much of, and what we are already not seeing as much of, is people willing to pay significantly over list price. Now, this time last year, that was like on every single house. The list price was just a recommended starting line. Like it was, what people offered on any given house was crazy. We're not seeing that madness at the same level now. Every now and then we have some key properties that are just hot and they get a bunch of a bunch of buyer activity with some multiple offers. But in general, this time last year, we might have been getting 10 offers or more on a house. Now we may get, if we get multiple offers, it may take a little bit longer to get the multiple offers, and there's significantly less multiple offers overall when it happens. So, maybe we get 2, 3 offers, which is still great. I mean, if you go back 5 years, my clients 5 years ago would have given their right arm to have 2 or 3 offers on a house. Yeah. So it's still a good market from that standpoint. And it is still low inventory. Right now, Muscogee and Harris County, there are only 405 houses on the market. That's not a lot of inventory. It's more than what we had last year, but it's not a lot of inventory. So keep all of that in mind and perspective. Looking at Russell and Lee County, currently there are 226 active listings in the East Alabama Board of Realtors MLS and 218 pending listings. So again, we're just not seeing those huge discrepancies in number, significantly more pendings than there were active. That's kind of gone, and I don't really expect that to reverse anytime soon. I think we're going to continue to see some inventory levels climb a little bit, but they needed to. We need a little more inventory in the market, which also settles some of the competitiveness where buyers aren't having to give their firstborn to even be considered to buy a house. So
some people, she's not wrong on that.
So anyhow, that is our basic wrap up. So it's not a bad situation. It's not easy on a lot of people with interest rates going up, and really more so than the interest rate situation, inflation is what is really hurting everybody so much. A bag of groceries that cost you $100 a year ago or so is now probably $140. Right. That's what's hurting people more so than home interest rates. Home interest rates going up, the biggest impact is buyers' ability to purchase. So the impact that it has is the amount of money that they can finance. As the interest rate goes up, it causes their payment to go up. So this time last year, maybe they could afford a $350,000 house, and now somebody at $350,000. I actually did those numbers this morning. So at $350,000, what? Tell me what that is now.
So basically, in January, you could have financed $450,000 for the same cost that you can now finance $300,000.
See?
So basically, buyers have lost $150,000 in buying power. So your buyer pools have shrunk some.
Yeah, it's the buyers are still out there, but what has happened is it's totally changed what they can buy. Right. And so if they had been looking all year last year at these fabulous $350,000 houses and were getting outbid and all of that, or excuse me, $450,000 based on the numbers that Dustin's giving us. Well, now they're looking at $300,000 houses. Well, there's a very big difference between a $300,000 house and a $450,000 house. So how does the buyer feel about that? What's the emotional reaction to it? In general, most buyers are going to reset and figure out what makes sense for them. And over time, people are going to get used to it, and it won't be that big of a deal. But right now, there may still be some initial disappointment of, well, my gosh, I thought I was going to be able to get this, and now all I can afford is this. So you may even see some buyers that it takes a little bit of time for them to readjust to how that feels and what that looks like. But at the end of the day, if they need a house to live in, they need a house to live in. And let me tell you this, I don't care if you're paying 7 or 8% interest. If you're renting, our rental market is extremely high rent, and that's 100% interest rate essentially, because you don't own any of it. So, and you're just paying somebody else's mortgage. Why not pay your own mortgage, even if you're having to possibly settle for something a little bit less than what you might have originally hoped this time last year. Make good, sound financial decisions on stuff like that, not just the emotional part of it. Right. So, any other thoughts?
I think it's a good time to buy a house. I really think that. I really do believe that. So,
I like the way Dustin thinks.
I do. I think it is. I just think it is. I think you're still going to see, regardless of what these rates do, I still think you're going to see an increase in the sales price. I do not think you're going to see a massive reduction. I may put something down in the comments so people can compare 2008 that everybody loves to compare this to. It's a really easy to read chart that just shows you the type of mortgages that we were originating back then and the amount that we did between about 05 to 08, and it shows you what we're doing now. It's mind blowing how many loans that we were doing below with credit scores below 620. So I think it'll be something to help calm you. I do not think we're going to see large tanking in values. I just don't see it.
No.
The recipe's not there for that. So.
And I know I've said it so many times, but in case you haven't, maybe this is your first time watching one of our videos, this economic situation is not like 2007, 2008.
Right.
That was a mortgage market meltdown crisis
Yep.
because of corruption in the mortgage industry. What's happening right now in our economy has nothing to do with mortgage corruption. All of the subprime lending and people who were basically just being doled out money who had no business getting loans.
Right, correct.
That is not happening right now. That has not been happening since that time. Got some serious rules and some very high standards on what it takes to be able to qualify for a mortgage as compared to what it was back in those days of 2004, 2005 that all led up to the mortgage market crisis. So please, this is, of course, an economic situation, just like the economy always does. It ebbs and flows. It has ups and downs. But please, please, please don't take 2008 and try to compare it to what's happening now, because it's not the same thing. It's just not. Now, that doesn't mean that whatever we're going through now doesn't still have its own painful consequences, but it's not the same situation.
No, I agree, 100%.
Awesome. All right. Well, I think that's all we've got for today and this month in housing with the Kim Mixon Real Estate Team and Dustin Steele from Northpoint. He's going to drop some information below, and you'll put your contact information.
I'll put my contact info down there.
Tell them how to reach you.
Yeah, you can reach me by cell phones. The easiest way, 706-405-6555. And no question's a dumb question, so call me.
That's right, especially in this market, because there's so many questions that people have, so don't be afraid to ask. Let us help you get the right, accurate, proper answers. Don't just talk to your friend who read something, who somebody told him something, and now the sky is falling. That's not the case. Trust us, the professionals. So if you're thinking about buying or selling, please reach out to me, 706-332-6349. Between me and Dustin, we can get you taken care of and make sure that you're making the right decision about your housing needs, whether it's time to buy or sell. Is this the right time for you? What does that look like? That's what we do. We're here to help you figure all of that out. So we look forward to seeing you next month. I hope everybody has a fabulous October, and we'll be back in November again, hopefully with some good news, possibly. We'll see. Maybe. I'm always going to put a positive spin on it. So
hey, everything's fine.
Everything's fine.
Everything is perfect.
It's fine.
Yep.
It's fine.
All good.
All right. See you guys.